The reopening of borders to foreign travelers, as the United States did Monday, could fuel sales at duty-free stores, and Coty is counting on that. The beauty company behind brands like CoverGirl and Kylie Cosmetics raised its forecast for annual earnings, largely topping Wall Street's estimates. Coty said it's optimistic for this holiday season as people travel and buy more at duty-free stores. It's also betting that consumers will pick up its cosmetics and fragrances as they return to the office and attend parties and social events. And while it's grappling with supply chain bottlenecks that have hampered the industry, it's combating inflation by cutting costs, boosting prices, and launching high-end products. Investors like the buffed-up outlook, driving Coty shares up more than 13% in early trading Monday. In its latest quarter, the company's top line rose 22% and revenue from its luxury brands jumped by over a third, prompting Stifel's analysts to say Coty's turnaround is on track.
It's just amazing, isn't it?
Yeah, it's been a long time waiting to find out.
Exactly. We've just been waiting with bated breath, and then suddenly the announcement came, and yeah, so happy to be getting back to it. For me, it's my first time to the US, so really excited.
I was meant to go just before COVID happened, and obviously it's been delayed this long, so it's really exciting to finally be able to go. Yeah,
excited. It's been a long time, so I think mostly relieved that we have a concrete date. So.
The weekend passage of the $1 trillion infrastructure bill fueled buying on Monday. Materials and cyclical stocks rallied, but a sharp slide in Tesla shares capped the S&P's and Nasdaq's gains. The broad indexes moved slightly higher, enough for new record highs for all three. The blue chip index finished 0.3% higher. The S&P 500 and the Nasdaq edged up about 0.1%. The S&P 500 rose for an eighth straight session, but Commonwealth Financial Network Chief Investment Officer Brad McMillan questions how much higher the markets can go.
The question really is, what's the catalyst once we finish up with earnings season? We've seen some good news. We've seen the economy start to turn around a little bit, but a lot of the tailwind we had from federal stimulus, for example, in the third quarter earnings isn't necessarily going to be there in the fourth. So I think we're going to see some downbeat guidance.
Shares of Tesla dropped almost 5%. CEO Elon Musk polled Twitter users asking if he should sell 1/10 of his stake in the electric vehicle maker to pay taxes. Around 58% voted yes. Coty shares jumped 15%. The cosmetics maker behind brands like CoverGirl and Max Factor raised its annual earnings forecast. It's betting that more consumers will buy its cosmetics and fragrances as they return to offices and social events and as they visit duty-free stores amid the rebound in travel.
China has been cracking down on its tech giants, including e-commerce titan Alibaba. Now the effects are being felt in Japan. On Monday, SoftBank said it faced a $10 billion hit to the value of its Mammoth Vision Fund, which invests in tech firms. Chief Executive Masayoshi Son said the reason was simple.
Alibaba shares sharply declined and the price of the Chinese stock that Vision Fund has invested in fell. These are the two biggest factors that drag down the value of our net asset value, or net profit.
Alibaba's stock valuation fell by around a third over the second quarter. SoftBank's stake in ride-hailing giant Didi declined in value from $12 billion to $7.5 billion. The falls come as China takes steps to rein in its tech giants. Son says that means winter is coming for SoftBank.
What happened to SoftBank Group is that we are in the middle of a blizzard. It's a big storm. It's the first cold blast of winter.
It all drove SoftBank to a quarterly loss of $3.5 billion. But Son remains undaunted, planning a multi-billion-dollar share buyback. Analysts say the firm also has a robust portfolio of other investments, including Indian ride-hailing firm Ola.
Today's a day of celebration. After 602 days, the US border is opening up for UK nationals. Important for businesses, but more importantly, the stories we've heard today of, grandparents going to fly to see their grandchildren they have not seen before, celebrating birthdays, giving hugs to their loved ones. So it's a major day of celebration, but also a significant tipping point for Virgin Atlantic and the industry at large. Look, we've shown resilience and adaptability throughout this pandemic, but with vaccines and very good social measures and just overall education about the state of the pandemic, which will hopefully become endemic, we expect things to move forward rather than backwards. But if they need to protect lives and livelihoods, we will of course adapt as we've done throughout. Flights are filling up quite nicely. About 45% of the bookings are for November and December, but we're already seeing Easter and the summer starting to pick up. Now, we're not at 2019 levels and don't expect to be that, but for Virgin Atlantic, we'll be at full capacity in terms of seats and flights by April 2022. Good news is we've already returned 1,000 cabin crew and 150 pilots that we had to let go through the pandemic back into Virgin Atlantic by year end. That tells you what we expect from demand for flights.